Now, you probably clicked on this video for one of two reasons. Maybe investing is something that you've wanted to do for the longest time and now you're finally ready, but you don't know which style of investing is going to be the most profitable or the one that suits your style, and now you want to give dividend investing a try and see how that works. Or maybe you're like me and a lot of other people that started off as day trading and started to lose money, or it was too stressful for them, and then they went through all these other styles and experimented and did research on them, and now you want to see dividend investing, like why everyone's talking about it, and you want to give it a chance. Well, this video is going to help you get your feet planted on the ground, and we're going to be using this very easy and user-friendly app called Robinhood to do that. So stick around. I probably made the switch to dividend investing maybe a month ago, and I'm already starting to adjust, and I already started getting some dividends. It's not much though, but I plan to build this portfolio much more so that the dividends can actually make an impact. And my goal is to get to a point where the dividends can literally pay for my basic expenses, at least maybe a mortgage or rent or utility bills or even traveling expenses. That is my goal, and you guys can set your goals too. So for you guys that want to start dividend investing, what you first need to do is get this app called Robinhood, and it's an easy to use app. Maybe after you start learning how investing in the stock market works, then you can go to maybe a little more advanced app, and there's lots of recommendations, but literally for dividend investing, Robinhood is all you need. And you can use my referral code in the description, make an account, and we'll both get some free stocks. So you can see right now, I'm currently up $12.64 today, and that is mainly because the United States and China finally made a trade deal. So you can see the markets and all those investors are reacting very positively, and it's just been going up ever since the pre-market. It's just been going up, and that's good. So let's take a look at the week. Up $20, not too bad. In the month, I'm up $32. In the past 3 months, I'm up $18. You can see the range here because of the different types of news about the trade war we would get. In the year, I am down. I actually can't see this because I have red glasses. I'm just going to take them off. You can see on the year, we're about to be composite and finally overtake the bad day trades that I made back in September. We're only down $1.75. And basically the same thing for all, because I only started in August. Dividend investing has made me so tranquil because now I know that regardless of what happens, I'm still going to be getting my dividend payments on the monthly basis. So just to give you guys some background, maybe a testimony of where I'm coming from, I'm going all the way back here because you can see your entire trade transaction history on Robinhood. So let us go. This is when I was buying all the cheap stocks because I didn't have enough money. This was before day trading. And then let me show you the few day trades that ruined it. So here it is. September 13th, I bought 3 shares of Overstock, which was priced at $28.80. And the equity was $86.38 because I saw it going up and up and up. So I was like, okay, let me join in, not knowing how the stocks work. And I set a stop loss. I set a stop loss at $19, but I was like, I was very confident in myself, so I canceled it. Worst decision I could have ever made that day. And then it just plummeted. It went down $8, I think. Yeah, it went down to $21. And since I bought 3 shares, and I think it was a leverage, I'm not sure. 8 times 3 is 24. Okay, it wasn't leverage. So I bought 3 shares. So my equity went from $86 to $65. I lost $20 that day. And I also had shares in USO, CAPR, I'm not even sure what that is, and Yuma. And they all went down. This was the following day. I set stop losses for all of them, and then all the stop losses hit. I'm not even joking. They all hit almost simultaneously. And I was so close to getting the pattern day trade warning, because the way it works is that if you don't have $25,000 as liquid cash in a trading account, you can only conduct 3 intraday trades. And then I switched to day trading. And now, if we set this, I started getting dividends. And I'm actually going to get another dividend from Disney on January. And here are the dividends that I've received so far. I only started a couple of months ago too, like I said. You could essentially start right now. Instead of buying that Gucci belt or those pair of Jordans or Nikes, take that money, put it back into your bank account if you've withdrawn it already, and connect it to your Robinhood account. Make the transfer and buy a stock of Apple. Apple, I have a lot of faith in Apple. Apple has been doing amazing this whole time. In the past 3 months, it's up $60. And put in Apple. You have an iPhone, then you know how Apple as a company operates. You have some knowledge about Apple. Put in Apple, and then you'll get your dividend each quarter of 77 cents. And you can buy multiple shares of Apple. So maybe you want 2 shares. So instead of 77 cents, it'll be 77 cents multiplied by 2. Maybe you like Disney, you got Disney Plus. Okay, invest in Disney. Maybe you have AT&T as your internet service provider or your mobile provider. Okay, buy AT&T. Their dividend yield is around 7%, I think. Have a bank account in Wells Fargo. Okay, invest in Wells Fargo. Or maybe you have a Discover card. Invest in Discover. Maybe you like real estate, but you don't have the capital to actually buy and rent out properties. Then get some REITs. Realty Income is a great one. AGNC is also a great one. And lots of people are investing in new residential investment. What I'm basically trying to say is that one of the best ways you can get started is looking at stocks from companies that you're familiar with and you're passionate about, and you know that they have a future for themselves. They're not going to go bankrupt. They're not going to create a product or service that no one's going to buy, and it's just very promising. So that's why I listed those. But if you don't want to do all of that, or if you want to, I guess, become more sophisticated in your dividend investing, then you can look up stocks, look at their financials, look at their dividend yield, look at their payout ratio. Their payout ratio is basically a percentage of how likely they're going to pay out their next dividend. Look at their dividend history, how long they've been giving out dividends. 10 years plus, that's a good sign that you're always going to get your dividend from them. Look at their growth over time. Look at their earnings per share. If their earnings per share is just make sure their earnings per share is higher than their dividend payout. So let's say the earnings per share for a company is 4.7. You don't want their dividend payout to be $5, because then they might have to make a dividend cut in the future, which is basically either getting rid of their dividend or lowering the rate of that dividend. But if their earnings per share is 4.7 and their dividend yield is 2.3, then that's a really good sign. That's the basics of doing research for dividend stocks. And I personally like to invest in dividend growth stocks, not just stocks that are less volatile and just pay out dividends, but I want to have some capital gains over time, because that's satisfying for me. And the more ways to earn a profit from stock investing or investing in general, the better. Some people are different. Some people only want the dividend and some gains, whether it be. But I personally want a growth stock that pays out a dividend. So that's what my portfolio is mainly consisting of. I've looked at the growth over time. I've looked at the products that all of these companies provide, looked at the financials, and if their financials continue to grow, then of course their dividend will grow along with the price. Some companies don't pay out dividends. Instead of paying it out to the shareholders, they put it back into their business corporation to reinvest to create better products. I think Apple was like that, and recently they became a dividend stock. They used to take their money and reinvest it to make all these better products, these iPhones, AirPods, and stuff. And now just recently they started paying dividends. Tesla doesn't pay dividends, for example. They take their money, they reinvest it, create better cars, they create a Cybertruck, stuff like that. So some people have non-dividend paying stocks in their portfolio just for the growth, and you can do that as well. Maybe you just don't have time. Maybe you have a job, you got to take care of the kids. You don't have time to look at this and manage your portfolio, micromanage everything. Well, here's what you do. You can get something called an exchange traded fund. And what an exchange traded fund does is that it replicates the movement of a collection of stocks, an index, and it records the movement. And all you have to do is invest in this share, and it covers a broad selection of stocks, hundreds, thousands, and a variety of sectors as well. I have one of those, and I'm not sure which one this is. I think this is the Dividend ETF, dividend paying ETF. Yes, it is. Power shares S&P 500, high dividend, low volatility. It is an ETF. So I invest in this, and so this one tracks the dividend yield of the 50 least volatile stocks in the S&P 500. And there's a whole other ones you can invest in. So you can buy shares of that and then just leave it alone, get your dividend every month, and just sit back and relax. I'm going to wait for it to pull back and then invest in more shares in that. And there's some other ones that I have on my watch list, and we have VYM. It's another high dividend yield ETF by Vanguard, and this one is actually, I should not use the dividend yield from Robinhood, so I'm actually going to pull it up on dividend.com. You can use dividend.com to look at all the stats that I was talking about earlier for choosing your dividends. The dividend yield is 3.37%. So yeah, Robinhood says it's only 3%, and it has not updated. That's why you should always use NASDAQ.com, Seeking Alpha, or Dividend.com to look at those types of statistics. Or maybe you're like me and you want some growth too. So you can also invest in growth ETFs, and these are all from Vanguard. You can invest in either VTI or VU. These track the stock market and their growth. You can see if we go on the 3-month, it's up $10, and in the 1 year it's up 30, 5 years it is up 58, and VU is much more pricier than VTI, and it's also a growth ETF, and the 3-month is up $18, 1 year it's up 56, and 5 years up 108. You could use either VU or VTI. You could use either VYM or SPHD, and you can make great dividend growth. And that is how you start. Hopefully this video helped you in some way, shape, or form. I'll put the ETFs in the description, and I'll classify them as the dividend ETFs or the growth ETFs, and you can put one of each. I'm going to be doing that for a Roth IRA when I have enough money to set that up. I was going to do that initially, but I heard that is usually for people that are beginning or are less experienced with dividends, and that's like the easiest way to get started. That's why I put them in this video. Or you can just invest in blue chips or stocks that you know that you have faith in, and or stocks that you do heavy research on. So yeah, guys, I hope you enjoyed. Don't forget to use my referral code, subscribe, and like the video to help out the algorithm. Follow me on Twitter and Instagram, and also check out my portfolio. The link is an M1 Finance link. It's a pie chart portfolio thing that they have. It's a very nice feature. It's near the top of the description. Yeah, guys, so get started, go get it, and your future self 10 years from now is going to thank you very much. And I thank you for watching this video. Enjoy the rest of your day. Peace.